If Cathie Wood had to buy one stock today and hold it for the next 10 years, it would be Tesla, the ARK Invest CEO said. In a recent Twitter Spaces interview with Cardone Capital, the famed money manager professed her bullishness for Tesla stock, which is the largest holding in her flagship ARK Innovation ETF. Though Tesla is still recovering from a dismal performance in 2022, Wood has poured more money into shares of the electric vehicle maker, snapping up $47 million of the stock in a single week in January. Well, especially because of how much it's been pummeled recently, and we're known for this, I don't think it'll surprise any of your listeners have heard of ARK, they've heard of Tesla. Wood said when asked for her 10-year stock pick. To give you a sense of that, I think Tesla hit $180 today. Wood shared in January. That $180 we believe will in 5 years. Our conviction is very high that the $180, if you do hold it, don't trade it, will scale to $1,500 in our base case. It's actually a little north of that now, so almost tenfold in 5 years. Wood explained. According to Wood, electric vehicles have entered the sweet spot of their S-curve, and Tesla is leading the charge. However, Wood clarified that that is based on their research. We could be wrong. For compliance reasons, I have to say that, said Wood. To get to the electric vehicle part of the story, that's 500 of the 1,500. In order to get that other 1,000, you have to believe, as we do increasingly, that Tesla is going to be in the lead and in the pole position to become the autonomous taxi platform, at least in the United States, said Wood. There are not going to be many winners here. Wood also talked about Tesla's EV business. If you want the same performance as Tesla in terms of range and same performance, another car company is probably going to have to lose money if they price their cars at Tesla's prices, Wood said. She further added that it's going to be very difficult for the other companies to keep up. We do think that they've got a very strong position on the electric vehicle side, explained Wood. But aside from the EV business, Wood is very optimistic about Tesla's autonomous platform. The autonomous platform will be more of a software-as-a-service-like model compared to an automotive model for the electric vehicle. So automotive gross margins are in the 25 to 30% range. The autonomous gross margins could be as high as 80%, Wood concluded. Her optimism comes after a difficult year for Elon Musk's car company, with shares plummeting 65% in 2022 amid rising inflation, interest rate hikes, and Musk's chaotic takeover of Twitter, which analysts say has damaged Tesla's brand. But Wood remains bullish on Tesla, particularly after the company announced it would be slashing prices on key models in China, Europe, and the US. That's expected to revive some of the demand that fell off in the previous year, and the price cuts mean rival EV makers will have trouble keeping up, Wood said in a separate interview with Yahoo Finance. She also thinks the company will be a leader in the delivery robot market, which Wood estimates will expand to $1 trillion over the next decade. ARK Innovation's stake in Tesla helped the ETF post a record monthly gain of 29% in January, with its holdings of its company now worth $733 million. Wood anticipates Tesla stock reaching $1,500 a share over the next 5 years, implying a 675% increase from current levels. Moreover, in a webinar in January, star stock picker Cathie Wood of ARK Invest suggested the rally in energy stocks will soon end and reiterated her bullish view on electric vehicle maker Tesla. According to Wood, Tesla will continue to take market share as global oil demand falls by 30% or more over the next 5 years. The company's recent moves to lower its prices will likely continue aggressively and put pressure on other automakers to match them, hurting its competitors significantly, she said. We are as bullish about Tesla as we have ever been, she said. Subscribe to Tesla stock for more.